Okay, now let's look at on derecognition and disposal of revalued property. Right? So derecognition, okay, the basic for derecognition and disposal of PPE, okay, it will be the same, okay, where we are going to remove both asset account and also any account related, which is accumulated depreciation. All right, we are going to remove everything, okay, when we dispose the asset. Okay, but the focus here is for revalued property. Okay, what else that we have to do, okay, for the derecognition and disposal of revalued property? All right, okay. Okay, upon derecognition, when derecognition happen, the carrying amount of an item of property, plant, and equipment shall be derecognized. The carrying amount. So how do we calculate this carrying amount? Okay, so to calculate the carrying amount, regardless of the model, okay, the carrying amount is equal to cost or revalue amount, depending on the model that you use, minus accumulated depreciation or subsequent accumulated depreciation, minus accumulated impairment loss or subsequent impairment loss. Okay, meaning that, right, meaning that the carrying amount that shall be derecognized here consists of the cost account of that PPE as well as the accumulated depreciation of that PPE and also the accumulated impairment loss of that PPE. Meaning that we have to derecognize everything. We have to close all of the account related to the property, plant, and equipment. Okay. So when should we derecognize the carrying amount of property, plant, and equipment? On disposal, okay, or when no future economic benefits are expected from the use or from disposal. All right. And then what happened to the gain or loss arising from derecognition of an item of PPE? Okay, so any gain or loss arise, okay, shall be included in profit or loss when the item is derecognized. If it is gain, then you will recognize as revenue. If it is loss, then we are going to recognize as an expense. Okay, but how to calculate gain or loss on disposal? We are going to compare, okay, between the net disposal proceed and also the carrying amount. Net disposal proceed could be the selling price of the asset. Okay, the amount of money that you receive from selling the asset. Okay, or any other consideration that you receive from selling the asset. Okay, minus the carrying amount. All right. Okay. But for revalued asset, okay, for revalued asset, okay, we are going to remove also, okay, or we are going to close asset revaluation reserve account. So how to do this? Similar to when revaluation surplus realized, where we are going to transfer from ARR to the retained earnings. Okay, we are going to transfer from ARR to retained earnings. Any balance in ARR will be transferred to the retained earnings. That is what will happen, okay, on derecognition or disposal of PPE. Okay, we have to close cost account, we have to close accumulated depreciation account, accumulated impairment loss, and also ARR account. All right. Okay, so now let's look at one example here. Example 4.1, derecognition and disposal of revalued property. Mina Berhad acquired a plant at a cost of 5 million on 1st January 2011 with an estimated useful life of 25 years. The plant was revalued to 6.02 million on 1st January 2014. Any surplus on revaluation realized throughout the use of plant is to be transferred to retained earnings. The plant was subsequently sold for 7 million on 31st December 2016. The company adopts the revaluation model. Okay, the company adopts the revaluation model, meaning that any increase or decrease in the value of plant, then you have to prepare the revaluation. You have to calculate for you have to recognize if there is any surplus or deficit from the revaluation. Okay, and the requirement is number 1, to calculate the revaluation surplus or deficit on 1st January 2014, to calculate the annual amount of ARR transferred to retained earnings from 2014 onwards, to calculate any gain or loss on disposal on 31st December 2016, to prepare the journal entry to record the above transaction, alright, and then to prepare notes to PPE, okay, for 2015, 2014, 2015, and 2016, alright. So let's look at number 1, to calculate the revaluation surplus or deficit on 1st January 2014. Okay. So when you are required to find the surplus or deficit on revaluation, what should you do? Okay. To find the surplus or deficit on revaluation, number 1 is, okay, to compare carrying amount, okay, with the fair value. Okay, to compare the carrying amount with the fair value. By comparing the carrying amount and fair value only, then you will get either surplus or deficit. Alright, so the first step that we need to do is to find the carrying amount. We already have the fair value, okay, which is on 1st January 2014, the fair value given is 6.072 million. Okay, that one is given. Okay, but in our computation, okay, we are going to start from the cost. As I always remind you before, to start your working, to start your computation, always start from the cost so that you can see what happened to the carrying amount clearly. Okay, alright, so cost, which is on 1st January 2011, when the asset was first acquired. Okay, the cost is 5 million. Alright, the cost is 5 million. Okay, and then the carrying amount that we want to compare with the fair value is the carrying amount on the same date with the fair value given, which is on 1st January 2014. So we are going to find the carrying amount before the revaluation took place. Okay, on the same date as the fair value given, which is on 1st January 2014. Okay, so how do we find the carrying value? Cost minus accumulated depreciation minus accumulated impairment loss. Alright, so no impairment loss, but we do have depreciation. Because why? Because this plant has an estimated useful life of 25 years. Right? Okay, so how to calculate the accumulated depreciation? Cost, okay, divide by the estimated useful life, 25 years, for how many years? From year 2011, 2012, and 2013. Right? So 3 years. Therefore, 5 million divided by 25 times 3 is equal to 600,000. The carrying amount on 1st January 2014, okay, is 4.4 million. Okay, alright. And then we are going to compare with the fair value from 4.4 million to 6.02 million. Okay, do we have surplus or deficit? There is an increase, okay, from 4.4 to 6.02. There is an increase. So this increase is called surplus on revaluation, 1.672 million. 1.672 million is the surplus on revaluation. Okay? Alright, so you have answered question A. You are required to find any surplus or deficit on revaluation. The surplus on revaluation is 1.672 million. What about the next question? Next question asks you to calculate the amount to be transferred from ARR to retained earning every year from 2000, starting from year 2014, okay, for 2014 onwards. Alright, okay, so how to calculate that one? Okay, do you still remember what is the formula that I gave you just now? How to calculate the revaluation surplus realized? Okay, how to calculate revaluation surplus realized? Number 1, okay, to find the difference between the original depreciation and also the new depreciation. Alright, okay, so let's look at the answer for B. All right. Annual amount of ARR transferred to retained earning from 2014 onwards. We can only transfer from ARR to retained earnings. We can only transfer if we have any balance in ARR. In year 2014, okay, we revalue our asset, and then from the revaluation, we get surplus on revaluation. And we have accumulated that amount in equity, okay, in asset revaluation reserve. So now we have surplus in asset revaluation reserve account. Okay, so how much is the surplus? 1.672. How much to be transferred from ARR to retained earnings every year? All right. So you calculate the difference between the original, this is the original depreciation, with the new depreciation based on the new fair value. Okay, what do we call this new fair value? We are going to call that also as new gross carrying amount. Sometimes it will be referred to as gross carrying amount, new gross carrying amount. 5 million is the old gross carrying amount. Okay, all right. So the old one is 5 million divided by 25, and the new one is 6.072. Okay, the revalue amount, which is the fair value at the date of revaluation, divided by the remaining useful life. 25 minus 3 equal to 22. Okay, therefore the new depreciation is 276,000 minus the old depreciation 200,000. There is a difference of 76,000, meaning that starting from year 2014, we are going to deduct, or we are going to transfer 76,000 ringgit from ARR to retained earnings. Another way to calculate this one is to take the revaluation surplus balance in ARR, which is 1.672 thousand, divided by 22, or remaining useful. You should get this. You should get the same amount, which is 76,000. All right, either one. Okay. All right, C. Okay, requirement C asks you to calculate gain or loss on disposal. What is the formula that I shared with you just now? How to calculate gain or loss on disposal? Okay, any proceed that you receive from the disposal of asset minus the carrying amount. So we do have the selling price for year 2016, which is 7 million. But do we know the carrying amount? No, we have to compute the carrying amount. So the disposal took place on 31st December 2016. Okay, so I will go back. So I have to go back, okay, to the previous computation, and to continue from there to find the carrying amount for this revalued property. Okay, so the disposal took place on 31st December 2016. Okay, and we stop our computation at new carrying amount or fair value on 1st January 2014. All right, so I'm going to do this on year by year basis, okay, to make it easier for you to see the changes that happen throughout the year. All right, furthermore, we are going to prepare notes to PPE for year 2014, 15 and 16. So it is better for you to, okay, show this computation also year by year. All right, okay, starting from 2014. So we stopped here just now. So now we are going to continue the computation. All right. Okay, in order for us to find out the carrying amount at the end of the year, okay, we need to calculate for depreciation. Okay, so how to calculate the depreciation? You take the new gross carrying amount or the fair value, okay, which is 6.02 million, divided by remaining useful life after the revaluation, which is 22 years. So you get here 276,000, and the carrying amount at the end of year 2014 is 5,796,000. Okay, all right. For year 2015, we are going to provide other depreciation. Okay, we are going to provide depreciation of 276,000. At the end of year 2015, the carrying amount is 5.52 million. Okay, And then in year 2016, because the disposal only took place at the end of the year, and then there is no statement or policy saying that no depreciation in the year of disposal. So we are going to keep on, we are going to keep on providing for depreciation until the date, the asset was disposed. Since the asset is going to be disposed at the end of the year, so for that 1 year starting from 1st January to 31st December, we are going to provide a depreciation. Okay, so that's why here we provide depreciation, for year 2016. All right. And then on the same date, 31st December 2016, the asset was disposed. Okay, so on disposal, what should we do? We are going to derecognize the carrying amount of PPE. So that's why I'm showing you a derecognition of the carrying amount of PPE. So I derecognize everything, hence the carrying amount at the end of the year, the new carrying amount after the disposal is 0. All right. Okay. So the only thing that we need here, in order for us to calculate the gain or loss on disposal, or to find out whether do we have any gain or loss on disposal, is to find the carrying amount on the date of disposal. So now we have our carrying amount, which is 5.244 million. So let's compare with the selling price. All right. Okay. So now let's complete our computation. So we do have the 7 million here, and then we have here the carrying amount 5.244 from our previous discussion. All right, so the difference is 1.756. So selling price is more than the carrying amount, so we have gain on disposal. So we have gain on disposal. All right. Okay, so let's proceed to the next one. Okay, to prepare the journal entry. To prepare the journal entry. All right. Okay, since the question did not limit, the year or the date, for the preparation of the journal entry, it would be better if you start the preparation of the journal entry starting from the date of purchase, or starting from whatever information that you have been provided with. Okay, so if we are going to starting from the date, the plant was purchased, it will be starting from year 2011, starting from 1st January 2011. So on purchase of PPE, the journal entry would be, so if I were to add one more, so here would be 2011, it will be debit PPE plant, okay, 5 million, credit cash 5 million. Okay, and the next one is for year ended 31st December 2014. Okay, when you were asked to prepare for year ended 2014, meaning that you have to take into consideration all the transactions that happened throughout the year 2014, from 1st January 2014 until 31st December 2014. We have to take into account every transaction that happened. Okay, so to make sure that we did not leave out all important transactions, that have happened, in this question, or related to this plant, it is good that if you go back to the previous working or previous computation. Okay, so let's look at together again. Okay, so we are going to take into account all the transaction that happened starting from here, from the carrying amount here up to the carrying amount at the end of the year 2014, and then here for year 2015, and then here for year 2016. This is 2014, this is 2015, and this is 2016. Okay, so you have to study this one. You have to study the working. Only then you are going to prepare the journal entry. Okay, so what happened in year 2014? In year 2014, we recognize surplus on revaluation from our revaluation of asset, and then we do provide for depreciation. And don't forget about the policy of the company to transfer some amount from ARR to retained earnings. Okay, that information is not here, okay, but it is mentioned in the question, right? Okay, so let's see the journal entry. Before that, okay, because I'm going to proceed with the journal entry after this. Okay, what about year 2015? In year 2015, the only transaction that happened is we provide for depreciation. Okay, year 2016, what happened? Number one, we provide for depreciation. And the next one is we dispose the asset. Okay, we dispose the plant. All right, so now let's prepare the journal entry. Okay. For year ended 2014, number one is to record the revaluation. Okay, for depreciable asset. What is the first step to record the revaluation? The first step, to eliminate the accumulated depreciation. To eliminate the accumulated depreciation. How to eliminate accumulated depreciation? By debiting accumulated depreciation account whatever balance that we have recorded earlier. So we have recorded earlier the amount of 600,000. You check again your working. You look at any accumulated depreciation that you have provided before the replacement took place. Okay, before the replacement took place. Okay, so the replacement happened on 1st January 2014. So look at before that, okay, how much is the accumulated depreciation that we deducted from carrying amount? Okay, so the total here in this case, in this question is 600,000. So we are going to remove everything. We're going to remove all the previous accumulated depreciation. Okay, the accumulated depreciation that happened before the revaluation. So debit accumulated depreciation 600,000. Credit PPE. Okay, eliminate accumulated depreciation against the gross carrying amount of asset. So meaning that against the gross carrying amount of asset, meaning that we have to deduct this accumulated depreciation against the PPE plant account. Alright, so credit PPE. We are going to reduce PPE account. Okay. Okay, the next step is to restate the net carrying amount of PPE to its value. So how to do that? This is by recognizing the surplus on revaluation. Alright, so we have computed before and then we get surplus, so meaning that we are going to add to the asset value. So debit PPE plant, okay, the amount of surplus that we have calculated before, 1.672 million. Alright, and then credit AR at 1.672 million. Okay, okay, what has happened? In year 2014, we provide for depreciation. Okay, new depreciation that you have calculated before. So debit, what is the journal entry? What is the journal entry? Debit sulfur depreciation 276,000. Credit same amount to accumulated depreciation. And don't forget to transfer some amount from ARR to retained earnings. Debit ARR 76,000. Credit retained earnings. Okay. Alright, what happened in year 2015? Again, we are going to provide for depreciation. So debit depreciation, credit accumulated depreciation, same amount to 76,000. And then to debit ARR account and then to credit retained earnings account, 76,000 ringgit. Okay. Alright, that's it for year 2015. Okay, no other transaction that happened to this plant. Now let's look at what happened in year 2016. Okay, as our discussion before, what happened in year 2016? Number one, we provide for depreciation. Number two, there is a disposal of asset. And number 3, don't forget to transfer the amount of revaluation surplus realized from ARR to retained earnings. Okay, so number 1, journal entry for depreciation, debit SOPL depreciation, credit accumulated depreciation by 276,000. Next journal entry is for disposal. Next journal entry, this is for disposal. Okay, so how to record disposal? Okay, remember that. Okay, from the discussion on derecognition of asset, okay, of revalued property or other PPE, okay, will be the same. Okay, we have to derecognize the carrying amount. We have to derecognize the carrying amount. Okay, what is included in the carrying amount? Cost and accumulated depreciation. Okay, to derecognize, meaning that we are going to remove this account from our books of accounts. All right. Okay, so how to remove PPE plant account? How to remove account asset? How to decrease asset account? You credit PPE plant at its cost or its revalued amount. So now we have revalue amount, which is the fair value at the last revaluation date, 6.072. And then to debit the accumulated depreciation. Starting from year 2014, we have provided new depreciation of 276,000. Okay, 276,000 for 3 years, 2014, 15, and 16. Why 16 is included? Because it happened at the end of the year. Because it happened, this disposal happened at the end of the year. Alright, so debit accumulated depreciation, 828,000. Is there any cash received? Yes, 7 million. Debit. You debit 7 million. Alright. And then from these 3 accounts, okay, so you find, is there any difference between debit and credit? Any difference in the amount of debit and credit? In the total of debit and credit? Yes. Okay, yes. So the difference is to be recognized in SOPL. Okay, if you credit SOPL, meaning that there is a gain on disposal of 1.756. Is it tally with your previous answer when you calculate gain or loss on disposal 1.756? It should tally. It should be the same, 1.756. If your journal entry, you get a different amount. It could be either your computation here is wrong or your journal entry is incorrect. Okay, all right, it should be the same. All right, okay, and the last one is to credit retained earnings with any balance in account ARR. So in our ARR account, okay, after we minus 76,000 in year 2014, after we minus 76,000 in year 2015, the balance that we have in our ARR account in year 2016 is 1.52 million. And we are going to transfer or credit all to retained earnings because the asset was disposed. Alright, so transfer everything 1.52, debit ARR, credit retained earnings. Alright, so that's it for the discussion on the journal entry. Okay, that is the discussion for the journal entry. Alright, okay, next. Okay, next is where you are required to prepare notes to PPE. Okay, this is where you are required to prepare notes to PPE. Alright, so before that, okay, before we discuss on the notes to PPE related to this plan, okay, so let me explain first, okay, what is notes to PPE? Okay, so notes to PPE is to supply, right, or to provide additional info, right, on the carried amount that we have reported in the statement of financial position. Because we are not going to list down everything in statement of financial position, but we show only the summary, okay, or the total of PPE at the end of the year. All right. So in order for the stakeholder of the financial statements, okay, to get an idea where this amount comes from. So we prepare notes to PPE. Okay, so you may expect a very long list of PPE. Okay, a very long list of items. Okay, reported in notes to PPE. It could take pages of financial statements. All right. Okay, so what are the items, what are the elements, okay, that we disclose in notes to PPE? Okay, so notes to PPE can be divided into three sections. So the first one is the cost of valuation. Why valuation? Because sometimes if the company adopts revaluation model, so the cost could be replaced by the revalue amount. All right, so it can be cost, it can be valuation. All right, the second section in notes to PPE is the accumulated depreciation. Is the accumulated depreciation. All right, so the first one is cost of valuation. The third one is the accumulated depreciation. And then remember, from the definition of the carry amount, we do have one more, which is the accumulated impairment loss. Okay, which is accumulated impairment loss. Okay, so the third section, okay, if we have accumulated depreciation, then we are going to add another one, accumulated impairment loss. If we do have accumulated impairment loss, then we are going to prepare another section for accumulated impairment loss. And then the carrying amount, okay, instead of showing after the accumulated depreciation, it should be shown after the accumulated impairment loss. Okay, if we have any. Okay, if we don't have any impairment loss to be reported, then we don't have to show the impairment loss. Okay, what we are going to do is, all right, what we are going to do is to stop only at the accumulated depreciation, and then after that, we are going to show the carrying amount at the end of the year. Okay, so go back to this question. So the question asks you to prepare notes to PPE for 3 years, 2014, 2015, and 2016. Okay. Before year 2014, starting from the date of purchase of PPE, okay, or plant, okay, there is no revaluation made by this company. Okay, there is no revaluation made by this company, okay, since year 2011. Therefore, the cost that we carry in plant account, okay, we carry the balance, okay, at 5 million, which is at cost, okay, which is at the original cost of plant, 5 million. Hence, when we prepare notes to PPE, opening balance or balance as at 1st January, okay, maintain at 5 million, right, maintain at 5 million. Okay, what about the accumulated depreciation? Okay, for the accumulated depreciation from year 2011, 2012, 2013, all right, from our computation, okay, from our working just now, okay, we have deducted, okay, before 1st January 2014, okay, the amount of accumulated depreciation of 600,000. So that is the opening balance, 600,000. Okay, all right, that's it for opening balance. All right, what happened in year 2014? On 1st January 2014, there was a revaluation of plant. There was a revaluation of plant. So what is the first step to record the revaluation of depreciable asset? The first step, okay, that we discussed previously is to eliminate the accumulated depreciation. How do we do that? Debit accumulated depreciation of previous balance. Okay, so previous balance is how much? 600,000. Debit accumulated depreciation, meaning that under accumulated depreciation, when you debit, meaning you reduce the accumulated depreciation, you deduct from your accumulated depreciation account. So you are going to do the same thing here. Okay, you are going to show a deduction of 600,000 because of the elimination of accumulated depreciation. Okay, the next entry, debit accumulated depreciation, then credit PPE plant, credit PPE, credit PPE plant, credit asset account, meaning that you reduce your asset account, you minus from your asset account. How much? Same amount, 600,000. For what reason? An elimination of accumulated depreciation. Okay. Step number 2, restate the new carrying amount to its value. Okay, sorry. Restate the net carrying amount to its value. Okay, restate the net carrying amount to its fair value, meaning that to record the surplus or deficit on the revaluation. In this case, we have a surplus. So, what is the next process that you do? Debit PPE plant, credit ARR. Debit PPE plant. My concern is there any account that relate to PPE and accumulated depreciation? Yes, debit PPE. Debit meaning that you add. So, that's why you add 1.672. For what purpose? Surplus on revaluation. Okay, alright. Okay, next. What happened next? Okay, next. I am referring to the journal entry that we discussed before. This one. This one. This one. 1, 2, 3. Yes. Okay. So next, you provide for depreciation. Debit depreciation, credit accumulated depreciation. Okay. So there's an account here that relates to accumulated depreciation. So I have to take into account of that information. Debit ARR, credit retained earnings. Okay, that one is not to be included in notes to PPE because no PPE account affected here. Okay, credit accumulated depreciation by 276,000. When you credit accumulated depreciation, meaning that you add you add to your accumulated depreciation account 276,000. Okay, alright. Okay, so for year 2014, that's it. Okay, alright. So now you calculate balance at the end of the year, ataupun it will be balance CD for PPE and balance CD for accumulated depreciation. So balance CD for plant is 6.072, whereas for the accumulated depreciation related to plant is 276,000. Therefore, the carrying amount at the end of the year is 6.02 million minus 276,000 equal to 5.796. 5.796. If you are not sure whether this is correct or not, you can always go back to your computation above and then to check, whether is it the same as the amount of carrying amount that you have calculated before, 5.796 for year 2014. 5.796, is it correct? Yes. Is it the same? Yes. Okay. Alright, so when you prepare for the following year, what happened is, this balance at the end of the year, then this balance CD will become balance BD. Okay, alright, balance CD will become balance BD. Alright, for both cost and also the accumulated depreciation. Opening balance is the same as the closing balance of last year. Alright. Okay, so you brought up the amount to become the opening balance of the following year. So for year 2015, the balance for cost or valuation is 6.072 million. For accumulated depreciation, it is 276,000. What happened in year 2015? Nothing much except that we provide for depreciation and then we transfer to retain earning sum of revaluation surplus amount. Okay. Alright, so what happened, so the transaction that affect the preparation of notes to PPE is only the depreciation, the new depreciation. So we provide new depreciation here, and then we get, this would remain unchanged at 6.072, and then we have balance, at the end of the year for accumulated depreciation. Now increase to 552,000. What happened to the carrying amount? 6.072 minus 552 is equal 5,520,000. 5,000. Okay, 5.52 million. All right. So again, if you want to check whether you do this one correctly or not, you go back to your working and then check. Okay, carrying amount as at 31st December 2015, is it 5.52? If it is yes, then inshallah your answer is correct. All right. What about year 2016? Okay, as usual, the balance, the closing balance will become an opening balance. Okay, for both cost and also accumulated depreciation. Okay. All right. So what happened in year 2016? Nothing much except that we provide for depreciation for the year, and then we record for disposal of asset. Okay. When we record the disposal of asset, we remove the carrying amount. Okay. So how do we remove the carrying amount? Meaning that we remove both cost and accumulated depreciation. So everything will be removed. All right. Okay. So everything will be removed here. Okay, so meaning that we are going to remove, okay, dispose 6.02 cost, so equal to 0. Okay, and then disposal, we are going to remove all accumulated depreciation. So the total above is the total here is 828,000. So remove everything, minus everything, so equal to 0. Hence the carrying amount is equal to 0. Is it tally with the working that we prepared just now? Yes. Yes, the carrying amount is equal to 0. Year 2015 is 5.52. Okay, so our notes to PPE is correct. Alright. Okay. Alright, so let's move on to the next one. Okay, to show an extract to statement of changes in equity, particularly for ARR and retained earnings. Okay. Alright, in year 2014, okay, any revaluation surplus recognized will be accumulated in equity under revaluation, under the heading of revaluation surplus, or we use asset revaluation reserve. Okay, so what happened here, year 2014, okay, balance at the beginning of the year is 0 because they never do any revaluation before. Okay, and then we add surplus on revaluation. Okay, 1.672. All right, and then at the end of the year, we transfer some amount, okay, which is 76,000. All right, so at the end of the year, we have 1.596. All right, and then year 2015, okay, the only transaction that affects ARR and retained earnings is the transfer from ARR to retained earnings. Okay, all right, so 76,000 minus from ARR, and then you add to retained earnings. Okay. What happened in year 2016? There is a disposal of asset, meaning that we are going to close, okay, ARR account, okay, of plant. Okay, so we are going to transfer all balance, okay, in account ARR to retain earnings. All right. Okay, so that's all the discussion for derecognition and disposal of revalued asset.